welcome to the first in our Raising a Unicorn series with guests Gary Beasley and Madha Segete. I'm board member Jonathan Turk, Stanford 86 in Economics, MBA, University of Chicago. Thanks for joining Stanford Angels and Entrepreneurs United today. We unite Stanford's startup community and innovation centers beyond California with regular remote programming. The format today will start with speaker introductions, followed by a moderated discussion of Gary and Madha's journeys in growing a company to unicorn status. That's a valuation over $1 billion. Then we'll open up for audience Q&A. Note, today's event is for educational purposes only and should not be construed as investment advice nor endorsement. Welcome today's speakers, Madha Segete and Gary Beasley. Madha is a co-founder of and leads marketing at Branch, a unicorn mobile growth platform. Branch reached a valuation of $4 billion at its latest Series F round. Madha is also immersed in the company's award-winning global culture initiatives. She's a frequent speaker at top tech events such as Web Summit, a podcast host of How I Grew This, and a Stanford Continuing Studies instructor. She's a partner at X Factor Ventures, which invests in women founders. She earned her undergraduate degree in electrical and computer engineering from Cornell and Masters of Engineering and MBA degrees at Stanford. Now, Gary Beasley is the co-founder and CEO of Roofstock, a unicorn simplifying real estate investing platform. Roofstock recently reached a valuation of $1.9 billion following its Series E round. Gary has an exceptional track record in real estate, hospitality, and tech sectors. Previously, Gary led one of the largest single-family rental platforms in the U.S. through its IPO as co-CEO of Starwood Waypoint Residential Trust, now part of Invitation Homes. He was CEO of Joie de Vivre Hospitality, then the second largest boutique hotel management company in the country. As CFO of online brokerage pioneer Zip Realty, Gary charted the company's successful IPO. He's a regular guest lecturer at Stanford. Gary earned his BA in economics from Northwestern University and MBA from Stanford. Now I'll hand it to fellow board member Sheila for discussion with our guests. Sheila?
Thanks very much, Jonathan. I'm Sheila Pruva, and I'll moderate today. I'm founding co-president of Stanford Angels and Entrepreneurs United and also managing partner of Primero Ventures. I have an MS in computer science from Stanford. We're delighted to welcome our speakers, Gary Beasley of Roofstock and Madha Segete of Branch, and learn from their experience. Let's start at the beginning of your journey. Gary, you've had an exemplary career before Roofstock. What gave you the confidence to start it? And did you envision it becoming $1 billion business from the get-go?
Right before Roofstock, I was running, as Jonathan mentioned, a public company as a REIT, which we had taken public. It had done that for about 1.5 years. Had been with the company a few years prior to that. And what I realized was I really enjoyed the journey of building the company and the growth phase. And then once we got to the place where we were public, it became less fun and less interesting to me. It was more about sort of clipping coupons. And so I had always wanted to start something, had never had the right idea at the right time or felt like the right time. This felt like the right time for me. So I was confident because I felt like I knew the industry really well and I had really good industry relationships. And there were going to be tailwinds to the sector, the single family rental sector. With all of those things happening, it just felt like the right time, as well as wanting to kind of scratch the entrepreneurial itch. I'd been early at a couple of companies, but never a founder. So, and did we envision it becoming a unicorn? We hoped it would. We set a goal of being worth $1 billion in 5 years. It was aspirational. But quite honestly, I think it's turned out to be maybe the top 5% of cases that we had envisioned to be where we are today. A lot of things had to go right. But we did definitely set the goal to build a big company and a brand, not just to try to build up a company and sell it for, $20 or $30 million. We were willing to take more dilution and go big.
Madha, what convinced you to take the leap in starting Branch?
In our case, we didn't have as much experience and we were just kind of getting started. We were in business school, actually. It was, honestly, I don't know what convinced me. It's looking back, it feels like kind of a crazy idea. I think I had a very, when I looked at other people starting companies, I had a very rosy vision of what being an entrepreneur was. To be fully honest, I don't think I like fully understood how hard it was going to be. So maybe part of why I jumped into it was some sort of naivete that you get to be your own boss. You can't build something, but definitely didn't have as much experience as like Gary when we got started, and we failed a lot. So Branch is actually idea number 4. Stuck together with my team, and but it took us a while to get to the right thing, and we didn't have any experience in the mobile business when we got started, except the fact that we had built an app before. So it definitely felt like we were going upstream and didn't really have a lot of tailwinds at the time. But we did hit product market fit quite fast, which I think was a really good thing.
And when did you sense Branch had reached the unicorn league, if you will?
I mean, that's an interesting question. I don't know if I believe there's a league, or I think at the end of the day, valuation is just something that it just means that people are willing to buy your shares at a certain at a certain price that kind of talks about your valuation. But I don't know if there's a league, and I think things are changing so much that the market now is down, so someone might be raising at a lower valuation than a unicorn, even though they might be a really good company and solid future. So I actually don't put that much emphasis on the valuation. I would say for me, it's all about our revenue. So I think when we think about what we celebrate and our milestones, it's never really been about valuation or fundraising. It's been about revenue, creating value in the market. And so I don't know if there's a when. I feel like, every time, I think it's like a video game. You are at a level, so, and then at that level, you work, and then you figure out everything out, and you go to the next level, and the next level sometimes is harder, and there's completely new challenges. And even though you figured out all the challenges of the previous level. So I would say that, I think about it in you make your first million and your first 10 million and your first 100 million, and then you go to 200 million. So I think there's different challenges at each stage, and we're somewhere along the journey.
Great. Gary, how has Roofstock pivoted over the years?
So I would say the vision has grown from just being a marketplace to becoming sort of more of a full stack platform for single family rental investors. So I would say the vision has expanded. So rather than pivoting so much, we've added business lines. And I think the fundamental conclusion we came to after just being transactional for the first few years was it's great when there's a lot of transactions, but at some point there's not going to be. And we're only relevant to investors when they're trading, as opposed to the majority of the time when they're not trading. And so what we decided to do was build out more of a community of the owners. There's about 10 million owners of rental homes in the country, including, the institutional folks own only about 3%. About 97% are owned by about 10 million small investors. So we wanted to figure out how to build relationships with them. So we bought an asset management software platform that allows us, called Stessa, that allows us to have, it's like a Credit Karma for real estate owners. And so we have connectivity now with a free piece of software that any real estate owner owns rental homes or small multifamily can download and use. And we get all the data. We could communicate with them directly. We see their performance, and we can make really relevant offers to them. So we could be helpful to them even when they're not trading. And so that was a really important pivot, if you will, to say we need to have a relationship with the ultimate group that's going to be supplied to our marketplace. We could get the data and we could monetize the relationship in different ways. And I think that has helped a lot. Had we just stuck to the transactional model, we would be challenged right now, because we're now at 6% interest rates and number of transactions is coming down, but we have other business lines that can do well during times when transactions might be challenged. So for us, it was more, in some ways defensive, because we wanted to make sure we could survive downturns, but we did it primarily to be on offense and be able to build those relationships with all the owners.
And Mata, how different was the trajectory of Branch from what you expected?
I don't know, very different. I think, we started, we actually had a lot of different pivots. So we started with Fitbit for dogs, and then we did a photo book printing app, and then we did a printing SDK, and then, Branch, we started Branch 8 years ago. I would say from a vision of like what we were trying to build, it's not that different. We had this idea of building a linking and measurement platform and a discovery platform, and we are very much on the same path that we envisioned. I wouldn't say that when we started the company, we envisioned that we would get to Branch, but once we kind of hit on Branch, we saw what we thought our growth would be. And I think we're quite close to that. So I think a lot of like the more unexpected parts were really the early years, the first year and a half to 2 until we actually figured out what we were doing. Then after that, it's been a lot more predictable, I would say. After we really had product market fit, I think it was hard for us to find a product to get a product that had it, because we were so new to the market and we were trying a lot of new things. So
could you maybe walk us through what Branch does quickly as well?
Yeah, so the mobile ecosystem is very different than the web. So on the web, if you want to put the website up, you can just put the website up, and it's quite democratic, and it's very easy to link because there's a standard on the web, and everyone uses that standard to link to pages within websites. With mobile is different. When you have like the mobile system, it's actually owned by by Apple or by Google. So you have iOS and Android, and the way apps exist in that ecosystem is different than on the web, and they each have their own standards. So linking within an app is actually a lot more complicated. You can't just have a link that works everywhere. So we created a hosted linking solution that basically makes sure that when you click on a link, you're taken to the right place within an app. If the person doesn't have the app, or maybe it's on desktop, they're taken to an actual website. If someone doesn't have an app, they go and install it, then they're taken to the thing that they were supposed to be taken to. And that's actually because the mobile ecosystem is so fragmented, it's actually a complicated challenge to solve. And in addition to that, because we create the linking and the experience, taking people to the right things, we were able to help brands measure how people get to their apps, to the content within the apps. So we do both. So our customers are companies like Uber or Twitter or Airbnb. They use us. So when you click on an Airbnb link, for example, that someone might share with you, it's actually a hosted link by us.
Okay. And what factor would you say contributed most to Branch's success?
I don't know. I think it's a mix of we were at the right time, we were in the right place, we built the right product. We had faced this because we had an app ourselves. We knew that this was a problem. That's kind of how we stumbled into this. We were trying to solve this for ourselves. We realized it was really hard. We built a solution, and then we ended up selling the app and focusing just on this. And then I think, people always ask. So one interesting thing is we are 4 founders and we're still together after, I think it's been almost 10 years since the first 2 of us started. And I would say that we've had a lot of grit and we work really hard. So people always are surprised how hard, and how we made a lot of sacrifices to make this company work. We was like definitely not like an easy, we hit on something and it just went from there. It's hard to convince people to integrate and use you, and it's a complicated product. So there's a lot of ups and downs. So probably the grit and the fact that we were able to hire really good people that also had grit. And the fact that we were, we had product market fit and we had like a product that people really wanted. I think those two things probably together, and the size of the market.
What would you have done differently while building Roofstock, Gary?
Well, I think we waited too long to build out our real data science capabilities. It's something that we sort of always knew that we needed to do in the very early days, but quite honestly, we couldn't afford any data scientists at the time. and I think, now we're much more open to hiring people anywhere. So I think, what I would have done differently now, experiencing what we have through COVID and remote work, where now the majority of the company lives not close to any of our offices. I would have moved to more of a remote model sooner, because I always resisted it. And once we hit COVID, we had to do it, and it's worked. And so now, every company has their own journey or their own philosophy as it relates to that. But I would have hired some great people in different places earlier. I think we could have made a lot of progress sooner.
Now, what was your most important lesson from building Branch?
You're on mute.
Oh no. It's such a rookie mistake. My most important lesson. I think my most personal important lesson was to have a growth mindset. And I think that's really interesting because, I think many people who have grown up with a growth mindset, they don't quite understand the difference. I grew up in communism, I didn't have a growth mindset. It was very much like you are good at this and not good at that. And so I actually took feedback quite personally, and it was very hard for me to accept. And I didn't think about feedback as like, oh, this is like a way for me to grow. And our CEO, one of my co-founders, I think he's like really good at this. He really thinks like, well, I'm a machine and every feedback just makes the machine better. And I think learning how to change and think that way has helped me the most grow as a leader, grow as a founder, grow the company. And like I'm wrong a lot. And I think, admitting that, taking feedback and understanding that, every idea is just as important, and the feedback for me has helped me grow. And part of that feedback was to be more open and try things out. And so I think for me that has been the biggest lesson. It wasn't really about building a company. I think when you think about what does it take to build a company, for me it's like grit is the thing, because I feel like if you care enough and you want to build enough a company, you will get there. It might be your first try or second try, or in our case, our fourth try. But you keep going and you are a smart, driven, hardworking person, you will get to something that will have product market fit and you can build a strong company. It's just like the question is, can you go through all those iterations? And I think the more experience you have in a market, the more likely you are to get to that something that works well earlier on. The younger and less experienced you are in a certain area, the longer it will take, like in our case.
Now, either of you are welcome to jump in on this. How did your team evolve over time?
Well, I guess I could start first. My philosophy was to hire people. I kind of tried to overhire as much as I could early. And so I hired a head of HR who had overseen a very large bank, for example, when we were tiny. And so a lot of the people said, why are you hiring this guy who comes from this huge organization who's going to impose all this structure on us? And so I was constantly arm wrestling with him because he wanted to impose a lot of structure. but I knew at some point we were going to need that formal review processes, all these kinds of things that no one wants to do when you're starting a company. So it was good hiring people who had that experience, who could, in some ways, we grew into them as opposed to the company outgrowing the people that we hired early. So I've had very little turnover on my executive team because of that, and they tended to bring experience. So we also, have been able to keep the culture alive, and we've got a very positive but high performance culture. And so we've done a pretty good job of hiring people who fit into that mold where we're a team and we support each other, we push each other, but we have a sort of a no jerks policy, which I've had to enforce occasionally. I've had to let a couple of people go over time because of that. And I made the determination, even though these people were very talented, that it would have been cancerous to the team and it would have been antithetical to the culture we're trying to build, because I think it's so hard to build these companies and without a foundation of trust where people will speak openly, and it's not going to work, at least for a company that I'm running. And so that's something that it's always been a challenge to find people who are really, really good, who you think are going to be good teammates, and also bring the right kind of diverse thinking. But I think we definitely hire for both talent and fit.
Yeah, I think very similar to Gary. I would say we weren't as good at hiring. We didn't have as much experience, we hadn't run companies before. So I would say probably the biggest mistakes we made earlier were with hiring an executive team and senior leaders. And we've had a very hard time with that. I think we have a strong team now. It took us a long time to learn how to do that. And I think we sometimes hired the wrong people who were, or maybe we hired the right people, but we didn't, we had the wrong expectations of them. Mm-hmm. I think that has been a challenge for us. I think we've become better when it comes to how we hire. Similar to Gary, we look for specific traits in culture fit, so people have and share our values. And we have a special part of the interview where someone outside the team where someone's going in does that interview to look for, and it's usually people who have been at Branch for a long time and really understand our culture. We don't have someone who's joined a month ago, actually do those interviews, but we also look for, expertise and skills. And that's up to the hiring manager and the team to look for that. So we kind of look for both things. We also have humility is one of our values. So we've also, think similar to what Gary said, we have let go of people who are amazing in their role, but they were kind of jerks and didn't really work very well with others. So the 4 things we look for that are kind of taking all our values and putting them into 4 traits are humility, collaboration, drive, and smarts. So we feel like if someone has those 4 things, they'll do well at Branch because it's kind of an embodiment of all the values in our culture. So if someone only is very smart and driven, but not collaborative and not humble, then they won't really work out. And I can think of a few people that didn't work out at Branch because of that. But the other is also, it's also true. If they could be collaborative, and work well, but if they don't make good decisions and they don't use good judgment, then they sometimes don't work out as well.
How have your investors evolved over time?
We've had different people lead different rounds, but we had our first investors are still with us. So in the early days before we were even Branch, we had this company called Pear invest in us, Perchman and Mar. And they're still actually really involved, and I still chat with them sometimes. But then the main investor has been actually NEA, and they led our seed NRA, and they actually helped us around, and they led our F. So in many ways, they they really believed in us and stuck with us, and there hasn't been that much evolution. We've had a few other companies kind of come in at different rounds, but the main investors are still like NEA owns a big portion of our company. So they are, and if they've really, I think we've been really lucky to work with, really great investors there, and we really felt they were on our side through the ups and downs. And I think that has been really awesome.
Did you want me to address that as well, Sheila?
Yeah, go ahead, Gary.
Yeah. We similarly, we've had different, unlike Mata, we've had different leads of every round, but generally all of our investors have participated in each of the rounds, not always pro rata, but usually they've participated. When we started Roofstock, when I left the company I was running, I was fairly certain Khosla Ventures was going to lead our Series A based on a couple of good conversations I had with them. So it was a very easy Series A fundraise. Now they still had to complete their diligence and all that kind of stuff, but I felt confident. And so we went right to a Series A off of a 8-page fundraising deck. And that's how we got started. And that's when I knew I could hire a team, because I didn't want to leave my public company CEO role and then go spend a year trying to raise money. I wanted to be able to get going immediately. And so and Khosla was game for that. And then we just brought in new leads. We had Bain do our next, and then Lightspeed, and most recently it was SoftBank who led a $240 million round just very recently. And they, I think, are probably the perfect investor for this time, because they're very patient and long-term investors. And so when I had my meeting with Masa, he wanted to give us more money rather than less money, because he feels like over the horizon they're looking at capital as the weapon that they could bring, is the way that sort of they describe it, and they're not looking for any near-term liquidity. So I feel like we've been able to attract the right, I think maybe lucky, oftentimes it's better to be lucky than good, the right investors at the right time. And had we had another route we could have gone with our Series E, is kind of a late stage or a crossover investor where you'd have to commit to be going public in 18 months type thing. And there are plenty of those out there, and they're really good investors. But as I'm staring at this market right now, I don't want to commit to anybody that we're going to go public in 18 months, right? We want to stay private longer. So we're fortunate that we picked an investor who's not looking for fast liquidity. And I think some of the early investors were good signals to later investors because they were reasonably well-known, and the individuals who did the deals were well-connected. And I think that there's different ways to build your cap table. We tended to, and by the way, we didn't always go with the highest valuation in our rounds. We always thought that they were good valuations, they were fair valuations. But I've done this enough to know who you have around the table is more important oftentimes than getting a little bit less dilution, a little bit more valuation out of a round. And we've constructed, like my management team, a very, very constructive and positive and good board out of the investors that we brought in.
Since becoming a unicorn, is running the business harder or easier for you?
We're such a newly born, I don't know what a unicorn sort of calf is, but it's just been a matter of a few months. So I don't think that's mattered. It's great to have, I would say having a strong balance sheet right now is probably more important than being dubbed a unicorn. They sort of go hand in hand, I guess. But in a market where valuations have changed, I mean, who knows? There's going to be a lot of companies out there that are going to become unicorns for the second time, right? I hope we're not one of them, but there's going to be plenty. I've tried not to change the way we run the business, even though we've got a lot of money now. And that's something that I think is really important. It's not like we've changed our expense policy or we've gone nuts with spending. because I've seen money evaporate before with lots of companies out there. So we're still running the business largely the same way, although we've leaned into some more marketing and we've I think addressed some tech debt that we had when we needed to hire some engineers and product people, but we haven't started lighting piles of money on fire. I don't want to do that. It's you got to keep that discipline, because that can be unhealthy for some companies that end up, having a really strong balance sheet.
Mata, has life been easier or harder?
I agree with Gary. We actually became a unicorn quite a long time ago, in our previous round, not in the most recent round. So I don't know if anything changed. I would say we became a unicorn right before COVID hit, and that was actually a very hard time. We ended up actually doing a layoff at the beginning of COVID because of the market conditions, and it was just a really tough time for us. I don't think it had anything to do with the fact that we were a unicorn. I think it was just more like the world changed. Maybe I'll answer this question a different way. Now that we're a bigger company and we're not like I'm not the founder of a small company, is my life harder or easier? I would say it's harder in very different ways and easier in others. So obviously, I think as you grow as a founder, it's a lot more of what I deal with right now is think about people and how to motivate people, how to grow people. And I think in the early days it was a lot more like I actually did a lot of the marketing myself and wrote blog posts, and I still do a little bit of that, but the things that I had were hard then, figuring out what technology to use. Those are a lot easier now because there's other people who are really good, better than me at doing that. But figuring out how to keep a very large team motivated, especially in this like environment where we're no longer in person all the time. As our team has grown, we have I think 15 international offices. That's way harder than it was in the early days, when we were just a small team in Palo Alto, and everyone. It was very easy to get everyone motivated and excited. So I would say that challenges are different. The challenges are very different as you grow.
Okay, now it's time for the live audience Q&A. Audience members, please feel free to type questions into Zoom's Q&A feature and upvote them. You're also welcome to type your questions into the chat. And we have some to start out. How did you translate the billion-dollar vision into tangible steps in the beginning?
That's for me. I take it. Yeah. So what we did was, it's funny. I'm remembering now that when we just were getting the company started, we had a meeting in my dining room, and we had a big pad, and we were doing some brainstorming, and we articulated the steps to that, and in order to get to our Series B, this is where we think we need to be, and this is where we need to get to our C. So it's the old adage: how do you eat an elephant? One bite at a time. So we're not going to get to $1 billion from where we started, which was 17 million in our Series A. We got to get to a 40 million series or 50 million Series B, then 100 Series C, and these are, we think, what we need to do in terms of revenues, metrics, just broadly kind of laid those out. And you could sort of back into what it would take to get there and say, okay, how many transactions will that take? What in terms of GMV, what does that look like? How many employees do you think it would take to do that? So we spent a bunch of time talking about that, and they said, okay, now that we see how to get here, let's just focus on this next one. Like we know we can get to this if we can do each of these things. And so it's almost like the sports metaphors. You've got your strategy, but then you've just got to focus on the next play, right? Or if you're in a 7-game season or series, you focus on the next game, even if you're down 3-0. You just have to win that next game. So I had everybody focused on what do we need to get to our next funding milestone. So we kind of use that as markers, if you will, to get there.
Okay, and we have a related question from the audience here for Mata. How do you know if you need to work more on your current product or if the product will not be viable and pivot is necessary?
Yeah, I think it's very similar to what Gary said. You have to figure out, like, you have to make certain hypotheses and assumptions and say, you know, if this product is actually working, we should be able to get these early results. Um, and we should be able to make sure our unit economics work. And it was different when we're doing B2C. When we had an app, obviously we're B2C, so the unit economics were very different than a B2B company. But for us, once we were able to have the product in the market and acquire users, we realized that our unit economics were not working. Like, it was way too expensive to acquire a user, and we weren't able to get the margins necessary to even make up for our acquisition costs. And we were so far from it that there was no clear path to get to that point. And we made certain assumptions, like well, for this business to work, we need people to buy, like, on average 3 or 4 photo books because these are cheaper and stuff. And we ran all the tests, and we realized that people weren't going to do that. Or we could build virality into the product. We tried, we couldn't do it. Versus with Branch, it was very much like, oh, we need to make sure that people would actually integrate this. Can we get to 10 people, to 10 apps to integrate in the next 2 months? And then can we get to 100? And it was very similar. And like with the previous companies, we couldn't get even close to those goals. And with Branch, we like blew them out of the water. So I think when I work also with other startup founders, I think this is actually the hardest thing that I've seen people struggle with in the early days. Like being able to admit that their product is not working, because there's this like middle part. Like with the app, we sold like 10,000 photo books. So it's not like no one wanted it. When no one wants your product, I mean, it's very clear, and you're going to be like, okay, well, I built something, no one wants it. But when people kind of want it, but some things just don't work out, it's very hard for you to say, oh, this is never going to be $1 billion business. But I think what we had, like Alex, our CEO, she's very like, he's like, well, I ran all, like, I made all the projections. There's no way we'll turn this into like a really large business. This is maybe at best a lifestyle business. Do we want to do a lifestyle business? And we decided we didn't. But you have to like actually pause and think through it. And admit, I think the problem is when you work on a project and people tell you, don't listen to anyone, you can make it work. All these people struggled for years before they made it work. And that's true. It's true, but also they don't talk about all the people who actually didn't make it, which is, so I think, this is definitely the biggest challenge I see with founders that I advise, is to admit you don't have product market fit and move on and try something else, because you become so attached to your idea and making that work. But I think what Gary said is similar to what we did. We didn't go as far as like how we're going to get to $1 billion, but we did go to the next at least 2 phases. And this is what we need to do. And if we can get there, we need to like move on and do something else. And we had, like, when we started Branch, it was the last, how people in video games, you play differently when it's your last life. So I bought this poster that said life remaining 0, because we had been working together for 1.5 years, failing so much. So when we started Branch, we said we're going to give it 6 months. And if it doesn't work in 6 months, if we can't like get to like 20 people to integrate Branch, then we're probably not up to something, and we're going to go and get jobs, because it's just been too tired. We're just too tired, and we've been doing this. We've been like failing for so long. But it worked, right? Like we knew it didn't take 6 months to know it was working. In like 2 or 3 months, it was very obvious we were onto something very big.
We have a question. What was the most unintuitive decision you had to make that actually ended up working out?
Well, I would say a couple different times in our evolution, we've challenged ourselves to decide, do we want to continue serving both retail and institutional segments, or do we want to just focus on one? Because oftentimes advice that you get as a founder is you have to sort of pick your customer, and focus ruthlessly on that customer persona and don't get distracted by, others. The early vision that we had was the opposite, that if we looked at the entire universe of US housing and turning that into an investable asset class, there's a real opportunity to democratize it for retail investors and also to work with institutional investors to make investing in the asset class more efficient. And there's going to be a lot of pollination kind of between them, and any house that's out there doesn't know if it should be owned by an institution or an individual. So we felt like we needed to build a robust marketplace that could cater to both. And it's a little bit unintuitive because it's hard, right? It's when I'm hiring product people, for a head of product, do I want someone who's got just a consumer sensibility, or someone who comes from enterprise? 80% of our revenues come from enterprise, but the whole customer facing part of our business is consumer. And so I have to find a product person with sensibilities in both. So which is challenging, but it also makes it quite powerful because our TAM is so large, because we can have a retail product that can cater to individual investors, that could be distributed through high net worth, wealth management, all those channels. And then we could work with the large, global asset managers who could pump lots of money through our pipes. So that's been something that we've been challenged a couple times to really defend that strategy, and we've stuck to our guns, and it has worked out because at different times it's really having the broader focus has helped us.
It's really interesting, Gary. For us, it's been actually charging. So we started as a free platform, and our longer term vision has been to be, the links behind every app, and then build a discovery platform because we link to all this content, we would be able to we would be able to be almost like the search for app content. So that was like the original vision. And to do that, we were free. And then our investors were like, well, if you start charging, you're going to start looking at revenues, and people will look at you differently. But what I think was unintuitive was actually when we started charging, it became easier to get more traditional enterprise companies, because they always felt, even though we weren't selling people's data, they felt like because we were free, there was some sort of catch.
Yeah.
And even though we would explain our vision and why we're trying to do this, we don't talk a lot about that other side of the business, but building this search part. So it was very well, you must be selling my data. And when we started doing contracts, they have legal review and they know that we're not selling their data, which we never were. But it became easier to get, the Macy's of the world who, before we had the high tech companies. But yeah, so that was definitely unintuitive. That became easier to get integrated and get people to use us when we charge them a lot of money. Yeah.
Now, how do you keep your team motivated?
Fear. No, I'm kidding. It's
Not in Silicon Valley.
no, it's not fear. One, everybody's an owner. It's one of our core values. So everyone has ownership in the company, and we're pretty transparent about things. I share numbers with people so they understand where our money's going and why. We're a very flat organization, and so we've got 750 people now, but everyone I think feels comfortable reaching out to me. So we try to keep it entrepreneurial, where there's a connection between the leadership team, me, others in the company, and we celebrate some failures. We let people try things. They have ideas. If they're really good ideas, we give them a little bit of money and they could, kind of pursue them. We have hackathons. We try to keep it, even though we're 7 years old now, try to keep it still feeling like it's a startup, even though arguably we're way past that stage. So I still try to act like it is. I think it's helpful. It keeps people motivated and engaged. And we have fun, by the way. We laugh a lot and we have a good, we push each other, as I said, but life's too short. And we also focus on balance, right? And keeping people, because I don't think it's sustainable if people don't have balance in their lives. And so we encourage that. And that has led to some, and like I said, fortunately low turnover relative to, I think, a lot of companies at our stage.
That's awesome. I think for us, we probably don't have as much fun. We're pretty intense. I think a lot of the other things are also very similar. We have a lot of transparency. I think basically our thing is you get to work on really cool stuff and you get a lot of independence. So as a company, I read this book on culture once, or this article in Harvard Business Review, and there was this like in how people make decision in companies. And I think in our case, it's like very much like we have owners and they make full decisions and they get to really own and be pushed outside of their comfort zones. We have people who have grown a ton with the company, and I think they are staying because of all the opportunities. And so our motto on the culture side is build, grow, win. So we're like a culture of builders. We want everyone to be able to build the best work of their lives, and then we enable them to grow and push people outside of their comfort zones. And we want people to feel like they've grown the most a branch than they have in their career. And then the winning part is furthering our mission to make the mobile ecosystem better. And I think, especially on the engineering side, because we touch every single person with a smartphone on the planet. And if you actually take all of that time, like if we make a link work, if one of those links for every person works versus doesn't work, and it saves them 30 seconds, if you add all of that time up, it's actually like a huge impact that we can make even though we're behind the scenes. So that's like and working at that scale, it's very rare for a company of our size, the amount of people that we touch and the scale of our infrastructure on the engineering side. So people really like that challenge. Yeah. But we should have more fun. I'm learning from Gary.
Yeah, I think
we need to be more intense. So we'll have to compare notes.
I do think like sometimes we're maybe a little bit too intense.
Yeah, and we certainly appreciate Gary missing out at the end of the game there to join us today.
For the record, I was at the Giants game, but I was with some of my employees. And we were intensely talking about strategy. So that's how we balance fun and
I love it.
Intensivity. Yes.
Mada, how has the anticipation of a recession affected Branch?
I mean, we're lucky because we also just raised our last round and it was also close, it was 300 million. But we are, our goal is like our next step now is probably an IPO. And we're really thinking about how can we get there? When will that be? And there's a different type of scrutiny. Gary knows better as a public company. The way you spend and all of that is very different. So I think, and knowing that because of a recession, it might hit our revenues, we're really like thinking very carefully about every decision, everything that we're doing on the business side, to make sure that, we get the highest ROI for every person that we hire, for every dollar that we spend on marketing. So that's been quite interesting and challenging. I wouldn't say that it's just because of the recession. There's obviously other factors, but I would say the possibility of a recession has made us be even more, look even closer to our numbers and our financials to make sure everything works. And just because we did raise a lot of money doesn't mean that we're gonna like spend it and grow like crazy. Where I think we're taking we know where we need to be and what we need to do when we're going in a very thoughtful way in that direction.
Gary, how has the shakeup in real estate and financial markets from rising interest rates impacted your business?
Well, we're just starting to see the impact of it. About half of our business is tied to transactions. And we've had a good start of the year, but with rates moving up really 300 basis points since the beginning of the year, investors are kind of rethinking their strategies. And we saw the same thing happen during COVID for a couple of quarters where there weren't a lot of transactions. Then it all started happening in 2021. I think that, we're going to see it's needed. Prices have been growing, 20+% year over year. The long-term average has been 3 to 4%. So we've gotten way ahead of our skis in terms of appreciation. That we just saw the first month of home price appreciation ticking down. You're going to see that come way down. And I don't know that prices are going to drop in nominal terms, but the rate of appreciation is going to come way down. I think a lot of investors are going to be cautious over the next few months because they feel like prices are moving their way. And so for us, that means just expect that. So we're expecting there to be, fewer transactions in the back half of the year than we thought going into the year, but leaning into other parts of the business that are not transactional and can be resilient through downturns. And actually, we're going to lean in and be opportunistic with some M&A because there are going to be companies that can't raise money on good terms that could potentially be part of Roofstock. So that's one of the uses of our cash. It's one of the reasons I don't want to burn through a lot of it, is I want to be able to use it to be on offense rather than, just sit there and earn nothing. So yeah, I mean, listen, markets are cyclical. I think as entrepreneurs, you have to be willing to react. And I'm hopeful that we could come out of this changing market with an even better and more resilient business model that has more recurring revenues that could thrive, throughout markets, and we could show that we could be opportunistic. I still think we're going to have nice growth this year over last, even in the face of challenging market conditions, and that's what we're trying to do.
The final question: what parting words do you have for our audience? Gary and then Mada.
I love what Mada was saying about grit. And, I couldn't echo that more. I can't understate the impact of that. And just knowing that a lot of things are going to go wrong, and you have to stick to it, and you have to really believe. And, that's what I would say is it's easy to throw in the towel early. I'm impressed that you guys had 4 different pivots, major pivots.
You were young.
Yeah. So, don't give up. I mean, there's so much opportunity out there, and things can and are going to go wrong. And I would just say, believe in yourself, hire great people, build a winning culture, get some good investors on board, and the magic can happen if you kind of get those pieces together, and then show some grit.
Yeah, I agree. I think for me, it's just keep on building. You might build stuff that doesn't work and doesn't fit, but I think if you just keep going, you'll get to the right place. And I think when it comes to people, like one advice I have, especially for early stage companies hiring, someone asked, would you hold the bus for someone? I would. I think it's, if you find someone really good, even though you might not have the perfect role for them in the early days, it's so important to have those generalists who can do different things. So I'll give you an example. My product marketing leader, we were hiring him to be an engineer. And the head of engineering said, no, I can't hire this guy. He's not good enough. And I was like, but no, he actually came and built a wrapper for our SDK, although he was a random dude. And so I just found a position for him, and he joined as a developer evangelist, and he's just so good. And he's been with us for almost 7 years now. And it's just been an amazing to see him grow, and the value he's brought to this company. And it's same with like our head of product. He was working for an app and we're trying to integrate it, and the founder was our classmate, wouldn't do anything. And then he came in and like built everything, and same, like we're like, oh, but he's not technical enough, but we brought him in and brought so much value. So if you find those people early on that you feel have the drive and the grit, if you bring them on, they can really help transform your business, even though and be the perfect for what you were initially trying to hire them. So that would be my one early advice.
I think that's a really great observation. I would say sometimes you even have to like buy another bus for a person. A good example is last winter, my general counsel was getting recruited by a bunch of blockchain and crypto Web3 companies. He had a securities background and he's very passionate about blockchain. And so he was thinking about leaving to go do one of these things, could change his life. I'm like, Jeff, don't leave. Stay here. I'll make you our chief blockchain officer and figure out how to tokenize homes within Roofstock. This way, we have a startup within a startup, we'll fund it. And we have all the infrastructure to make this work. And you could, if you pick one of these blockchain companies, odds are it's going to be the wrong one. And because so many of them are going to fail and they don't understand what they're doing. And we do, but you could be the expert. And he stayed and he's crushing it. We've got a whole initiative. We're about to launch a tokenization program. So he's moved from being our general counsel now to running a business unit. And he's the happiest he's ever been. And so, and just a super talented individual who we were about to lose. And those are those decisions you make as a CEO or a leader or founder of a company. I could have easily said, oh man, that sucks. I'm sorry you're going, but that sounds great. You should go do that because that's your passion. I was able to keep him on board. And those are the types of decisions you make. And that's what's, I think, so fun about building companies too.
Gary, it's a great story.
Yeah, I admire both of you for your dedication to the people.
I think at our stage, it is all about the people.
Yes, very much.
Thanks very much, Mada and Gary, for joining us today. We appreciate your time and wisdom. Also, thanks to the audience for your participation. We are at time, so back to Jonathan for upcoming announcements.
Outstanding. Really enjoyed the session. One of my favorites so far. You guys have been great. So thank you for your time and energy and wisdom. Pitching to Stanford Angels. If you or a startup founder you'd recommend is fundraising and would be interested in pitching to angel investors across chapters of Stanford Angels and Entrepreneurs, submit a pitch deck for consideration on the form. We also offer office hours to help founders prepare. Reach out to our email. Accredited angel investors who'd like to attend curated pitch events may sign up for paid annual membership. This concludes the lesson. Thanks for joining us. See you next time. Thank you.